address some more earnings. Abhishek Lodha, MD and CEO at Macrotech Developers, joins in on the show right now to talk about how their quarter has been and what's the future looking like. Abhishek, hi, good morning. Great to have you on ET Now. Thanks for taking the time out.
Good morning. How are you? Good to be here.
Very well. Abhishek, let's first start talking about, how the quarter has been. And I can't help but talk about the guidance. You've revised your debt reduction guidance to 7,000 crore rupees from the 6,000 crores earlier. That's clearly exuding a lot of confidence in the business as of now.
The business performance for last quarter, and I would say for the 9 months of the year, have been ahead of our expectations. On pre-sales, we've already done 9,000 crores for the first three quarters of the year, which puts us well on track to surpass our 11,500 crore guidance for the full year. On new business addition, we've already done just under 18,000 crores versus a full year guidance of 15,000 crores, which again, puts us well ahead of guidance. On debt reduction, while we are now guiding to net debt of 70 billion or 7,000 crores by the end of the fiscal, our more important point we're making is that we will continue to reduce debt even in the next fiscal. And our idea is to continually reduce leverage because we've shown over the last 18 months that we can grow substantially even as we continue to reduce debt. So while we'd earlier guided to 60 billion at the end of the fiscal, we're now going to reach that target only about 3 or 4 months into the next year. But we'll even continue reducing debt below that 60 billion number because we believe that the business is throwing off substantial positive operating cash flow, and we can continue to grow even as we continue to reduce debt well below the 60 billion that we had earlier guided to.
Morning, Abhishek. Always fantastic to have you back on ET Now. What, to your mind, has been the factor which has surprised you? Is it the underlying demand which has surprised you?
Hi, great to be with you again. I think the fact is that we believe that the housing market in India is at the start of a very long-term 15-year kind of cycle. You have a lot of positive underlying factors, including job creation, wage growth, and most importantly, good affordability supported by mortgage availability. On the supply side, you're seeing an increasing consolidation of supply because consumers are only comfortable buying from a handful of names in every city. With that happening, we believe that demand is likely to not only remain resilient but continue to grow. I think people, when the interest rate increase cycle started off in early to mid 2022, thought that housing would get quite severely affected. But we've seen over 200 bips of increase in by the central bank, and yet housing sales continue to strengthen, which really just convinces us that we are at the start of only into year 2 of a long-term cycle. So that's not a surprise, but it really is something which gives us confidence.
So let's talk about the specific of your guidance of pre-sales, 11,500. That was the number. You've achieved 9,000 in the first 9 months, which means you are definitely on course to beat that number as well.
Yes, it looks that we are likely to surpass that number. If you look at the 12 months of calendar year 2022, we've actually done over 12,000 crores already over the 12 months of calendar 2022. And yes, we seem to be on track to surpass our 11,500 crore guidance for the full year of fiscal 23. We do believe that this year's growth, which will be close to 30% for us compared to the 9,000 crores that we did in fiscal 22, is indicative of the sustainable demand. And as a company, we believe that over the medium term, we can continue to grow our pre-sales at about 20% and get our ROE close to 20%. And that is kind of where we feel this business's direction is headed, sustainable top-line growth and strong ROEs.
Historically, the ROEs of 20% are rare to find in the real estate sector. Very rare. I mean, over the years I've tracked it. How will you achieve it?
The fact is that by discipline in investment, a combination of using the joint development model along with outright ownership of lands in certain cases, and being very, very focused on execution and timely delivery, combined with the fact that you're now seeing nominal price growth of about 5, 6, 7% per annum, which is below wage growth, but still nominal price growth is very healthy for the market. All these factors together will allow us to get to that 20% ROE. Even for the current year, if you look at our underlying EBITDA, the embedded EBITDA from the sales that we've done this year, our ROEs are now over 15%. And over the next couple of years, and this is in spite of the fact that we've raised a significant amount of capital, as you know, over the last 20 months. So as the business grows, we do feel quite good about approaching 20% ROE.
Okay, so you're approaching the targeted 20% ROE. Good morning. This is Nayantara Rai also joining in on the conversation. Abhishek, you know, what we see, and if you look at the numbers, more than 60% of your contribution for sales comes in from the mid-income as well as the affordable housing, right? Now, having said that, Indians' understanding of what could be considered affordable and mid-income is also changing. If the same bracket wants larger cars, larger SUVs, I'm guessing they would also want larger homes. Is that what is happening? And then as a developer, as a leading developer, how are you reacting to that? And how is it reflecting in pricing?
Hi, Nandara. Yes, we had close to 2/3 of our sales by value come from mid-income and affordable housing. That's where we believe that most of the demand growth in India will be as jobs get created and people start entering more and more into the formal sector, which makes mortgages more available for them. What trend we've seen over the last 2-3 years is that in the mid-income and affordable segments, as well as in the premium and luxury, people are stepping up. Everybody wants an additional bedroom. So if the traditional unit in affordable used to be 1 bedroom, it's now the 2-bedroom unit. In the mid-income and premium, it's now the 3-bedroom unit. And luxury, of course, people want 4 bedrooms or even more than that. And the fact is that people recognize the fact that the home is no longer a place to sleep. It's a place to live. They spend real high quality, long periods of their life at home, sometimes working from home, often engaging in other activities, and people have realized that the home is so important to the quality of life and to the aspirations and the outlook of the family. So I think in general, with the nominal price growth coming in, Indians have gotten back to their tradition of home ownership, and as a part of that pattern, people are buying bigger homes, better quality homes from the best names and the best developers in townships or locations which have good infrastructure. In terms of pricing, so far this year, overall our pricing growth has been about 5%. At the start of the year, we guided to pricing growth of about 5 to 6% for the full year. So that seems to be the outlook that we are likely to achieve. And we believe that as long as price growth is below wage growth in India this year will be 8, 9, 10%. That's fantastic, because every time you have nominal price growth, all the existing homeowners feel wealthier. They start consuming more. It's just better for the overall economy. And as long as price growth in homes is below wage growth, you have affordability getting better. So this beautiful situation, this Goldilocks situation,
right,
is great for the economy and great for homeowners.
I hope our boss, Nikush Dalmia, was listening to this answer. Average wage increment should be minimum 10%, according to Abhishek Lodha, who's mapping that very closely as far as, of course, home buyers go. For us salaried people, that's always good news to talk about increments. Thanks, Abhishek, for joining us and for being so candid with us. 5% price hike seen, another 5% likely in 2023, 20% ROE also within reach.